This one rules change will cut my losing streaks in half and double my income. What exactly is that rules change? We are going to talk about that in a minute. But first, we got to have a discussion really quick, guys. It's halftime. It's halftime out there. We are 6 months into the new year of 2022. We have survived 1,000 point drops, a market shift, war, inflation, stagflation, a poor economy, COVID, we've survived monkeypox. Can you believe that, ladies and gentlemen? Hats off to you. I hope everybody's having a great year so far. But for those that might not be on track, maybe your trading has not been the best so far, that you had the goal of 2022 saying, this is my year to become a consistently profitable trader, as millions of people do, right? But this is a time to review your trading to see what is working, what is not working, and start adjusting for the rest of the year. Because I just completed my 6 month review, and I look forward to adjusting my trading going forward, coming up with new ideas, still testing these new ideas that I will briefly talk on this video, but I have a major one to share with you. So this is why journaling is so important, because if somebody comes to me and they say, I'm not having good results, and I see it all the time on social media, you guys reach out to me saying, I'm not finding good results. Hey, I'm not sure if this is correct. And what do I say? I always say, send me a trade review. Send me the last 20 trades you've done. Let's have a one-on-one discussion. And then if you come to me and you say, I don't have pictures of my trade review, or if you just send me a blank chart, I'm like, dude, well, what is this? Like, you can't review your trading if you do not journal your trades. How do you know what's working if you're not journaling your trades? How do I know? Personally, for me, my shorts this year are performing at 60% win rate with a 2.5 to 1 risk to reward to risk. But my longs are at like a 29%. That's a huge difference. That's double. All right. Clearly, I should be looking for shorts. Why? Because the stock market has been falling nonstop. I'm right now. I'm only trading indices, so the stock market has been falling nonstop. It's down like 20% this year. Same thing with gold. It's been dropping. So clearly, with everything falling in the market, my shorts are performing a lot better. So I could use that in my trading going forward to say, hey, maybe I want to start considering using a 200 moving average to get the overall direction of the market. Or I could say, hey, the market's been rallying for the last week hardcore. Maybe I should start changing my mindset to say buying opportunities are a lot better right now, right? Or hey, the market's down 20% this year. Clearly, my shorts are winning. I should be looking for selling opportunities instead of buying opportunities because I'm making money with that. Okay, guys, so this is why journaling is so important. The importance of having strong leg outs versus poor leg outs, multiple time frame versus non-multiple time frame, arrival versus poor arrival. Does price stall out in the zone before it takes off, or does it come straight through? This is why journaling is so important, because you need to review and say, what are all my traits that my winning trades have versus my losing? And one thing I came to this review, my 6 month review, was I had more losing streaks than I generally have. Right? I've had 3 losing streaks where I hit over 7 trades losing in a row. So I'm like, how do I avoid this? How can I at least try to cut my losing streaks in half? All right. So I started reviewing all my trades, and I thought to myself, I always require clean arrivals into my trade. So this is a trade on soybeans that I took. Prices came straight back into it, and I normally will get filled on the very first candlestick that price comes into it. So right here is where I would normally get filled. Okay. Now, what I noticed with a lot of my losers, like 50% of my losers, prices will come into my zone and just blow right through it, right? Which is fine. But what I noticed about my winners is they will come in for 1 to 2 candlesticks, and then they will start to take off in my take profit. So I thought to myself, since I have all my trades journaled, let me go back and see if I could make this rule change to say, let me wait 2 candlesticks before entering this trade, and then let's see what the win-loss percentage is. So I'm going to bring you through some examples just to see. We're also going to talk about the pros and cons if I do make this rule change. What will happen with my overall trading, percentage-wise, outcome-wise? Will I take less trades or more trades? How can I combat that? I might deal with problems in my mind by taking less trades. But what I found out is I cut my losing streaks in half. The most losing streaks I had was 5. The max I had this year so far is 10 or 11. right? And I never had more than 5 losing trades in a row with this rule change. And I'm going to show you this Word document because I have everything. So what I was curious about was waiting for prices to come into my zone, then waiting 2 candlesticks to start getting into my trade. So this is an example of a trade setup that I really like. I'm not going to talk about too much of why I really like this trade. I'm talking primarily about this right here. I'm going to talk about this. See how prices come up into it? This, hopefully you guys can see it. This candlestick right here is where I would normally be getting filled. But you'll notice I got stopped out within 2 candlesticks. Price came up, took me out of my trade. I ended up losing. So I thought, like I said, what happens if I wait 2 candlesticks and then I get into my trade? Okay. So in this example, I would end up avoiding this loss. So that would be a losing trade that I would avoid completely. Let's go to a new one. This is a trade that actually I would end up winning. Okay, let me blow it up for you guys. So price comes up into my zone. I don't get into the trade. Originally, this is where I would, that first black candlestick, and it still would have been a winner. All right, but I would have waited for price to stall out. So I wait for the first candlestick and I wait for the second candlestick, and then I don't necessarily enter exactly on the third candlestick because maybe in this case price is outside of my zone. I would personally wait for prices to come back up into my zone and then I would get filled. So I would get filled here on this third candlestick, this kind of black candlestick before it really starts to take off, right? So prices drop and then it rallies up back into it, and then it continues on. So this is a play where I would get long, or sorry, in this case, short after 3 candlesticks. Let's go into another example so you guys can understand this. This would be another trade that I would avoid, okay? Why? Because I would wait 2 to 3 candlesticks before getting into the trade. So price comes up into it. Perfect, that's 1. Okay, but 2. Look, prices broke my zone, my distal line. And this is something in the private group. This is why being surrounded around a community of like-minded traders is so important, because you can bounce ideas off one another. And when people do their reviews every 3 months or every 6 months or every year, we come with everybody's ideas saying, hey, what did you notice about your trading? Hey, I noticed 80% of my winners have this exact thing in my winning trade. So going forward, I am going to change my trading to only be looking for this. Or hey, what I noticed is if price breaks my distal line, as in this black line right here, if price breaks my distal line, 90% of the time, prices will hit my stop loss. So going forward, maybe that trader has a tighter stop loss, right? He says, hey, 90% of the time, if it does end up breaking it, it ends up hitting my stop loss. Only 10% of the time, it will actually continue to go on and hit his take profits. So maybe going forward, he could keep his stop loss really tight and have a better risk to reward to risk. You know what I mean? So in this example, because prices broke it, this would be a trade I am no longer interested in. Boom, I avoided another losing trade. Let's talk about this one. Okay, this one, boom, this is another trade. So right here, this would be a trade example of what I avoid, right? Because price comes in, I would avoid it by getting filled on the first candlestick. The second candlestick ended up breaking right through of it. Okay, let's go to the next one. This is a trade example of if I did make this rule change, I would end up missing on this trade. Okay, because price came in, I would have gotten filled. This was a real trade. I did get filled, and my take profit was at 2 to 1. But if I made this adjustment, this is a trade that I wouldn't get into the market because prices touched it and it just took off instantly. It went 2 to 1. I wouldn't have been interested in getting in this trade anymore after a 2 to 1 move, right? So that's when I would pull my order. If it goes 1 to 1, I'll leave my order still there, right? You could also potentially get better fills with this because prices will go deeper down into your zone. Or if price goes into it and then bases out for 3 candlesticks and you're already halfway into your zone, well, then I could basically double my risk to reward, right? Instead of going for a 3 to 1, I'll get a 6 to 1 instead because I would be entering on half a zone. And I could keep my original take profit, or what I could do is take half that zone and go for a 3 to 1, a normal 3 to 1 relative to that size. So this is a recent trade I took on soybeans. And this is same thing, really good setup. I like it. Originally, this is where I would have been getting filled on that first candlestick, but I ended up getting filled on this one here. Right? I waited for prices to stall out for 2 candlesticks, let the sellers cool down, see if the buyers step in. So prices went up a little bit, like 1.5 to 1, and then came back, got me filled, and then blew up. It just took off. I was out of this, I think, at 2 to 1. I actually just completely forgot about this trade, and I was supposed to have 3 to 1, which was up here, but I got into it and I just completely ignored it. I completely forgot. So ended up being a winner. But this trading rule, if I'd made a change, would cut my losing streaks in half and double my income. Right? So this is the importance of journaling your trades and reviewing to see what's working, what's not working. Do you notice a difference between your winning trades and your losing trades? Right? I can't do it for you, but this is the importance of having a group that you can do this by yourself and then come together and we say, hey, what did you figure out over the last 3 months, over the last 6 months? What are you performing really well at? Well, right now my shorts are doing really well, right? So maybe I want to make an adjustment in that. Maybe my trend trading is doing really well. Maybe what I notice is I have this little critique of a little thing that jumps out, and if I have that on my trade setup, I do really well, right? So then only taking those trade setups make the most sense, right? And that's how you will become a better trader. You will create a better edge. Because if you imagine you have a gem, you have a rough gem like a rock, what do? You give it to a jade master or whatever, they carve it, they cut it, it makes it look really nice. I guess we should be using a diamond as an example. It comes really rough. You shine it up, you cut it, and then you could give it to somebody else. Well, then you could fine tooth it a little more, make it sharper, make it look cleaner. And 6 months down the road, you're like, hey, I want to make it look nicer, and you could carve it again to make it look nicer. That's exactly what we're trying to do with our trading, but we've got to be doing it all the time because the market is always adjusting, changing. Our edge is getting worse every single day, so it's important to continue to make adjustments to your trading plan and to your trading setup, guys. I have a full report I got to give to my friends in the private group. Right, we're going to come together and review everybody's report over the next couple months. But I finished mine. I look forward to hearing about yours, guys. If you guys want to be inside of the community, moneyballtrading.com, and you guys can join the whole mentorship there. We'll get full access to the program of this exact trading setup of supply and demand. My trade ideas, my trade reviews, be surrounded around other like-minded traders. It's so crucial. We have these meetings twice a week going over people's trade reviews, making sure that people are taking the correct trades, going over the week ahead in the Sunday weekly prep meeting. It's so important. So if you guys want to join that, moneyballtrading.com. Would love to have you part of the team there. And hey, if you guys really like this video, really appreciate if you guys like it. Comment, subscribe. If you have any questions, you can ask them down below or reach out to me on social media at MoneyballAustin. Facebook, Twitter, Instagram. I will see you in the next one. Cheers. Bye-bye.